The Super Bowl is fast approaching. But before we can get to the Super Bowl, we must first have the Super Bowl of earnings. This week is a massive week, ladies and gentlemen. A massive week. Not only do you have massive names like SoFi, Starbucks, Boeing, ASML, Tesla, Meta, Microsoft, Lam Research, Visa, Mastercard, Apple, Intel, Nokia. Not only do you have massive names like these reporting earnings, you also have a slew of economic news coming out. A massive amount of economic news coming out through durable goods month over month. And more importantly, we have Fed interest rate decision and the Fed um, conference and meeting this Wednesday, along with all of those massive earnings we just talked about. On top of that, on Thursday, we have GDP growth quarter over quarter, and we are forecasted for a 40 basis point drop in GDP. Landmines everywhere, ladies and gentlemen. Landmines everywhere. Big earnings from Mag 7 names, massive economic data coming out, and the Fed is coming out, hopefully not with a vengeance again. Last time the Fed talked, he nuked the markets, ladies and gentlemen. He nuked them. And I'm hoping that this man doesn't come out here and do it again. So, massive week ahead of us. And in this video, we're going to be talking about the earnings, pretty much, which are the Super Bowl of earnings. And we're going to be going over these individual companies and seeing where the charts are telling us are going, and also doing a small earnings review. So let's get into it. And one more thing before we get started, we have to talk about it. China's new AI model, DeepSeek, is scaring everybody. They've come out with this. It's an open AI model, and they're saying that it is outperforming Meta's Llama 3.1, OpenAI's GPT-4, and Anthropic's Claude Sonnet 3.5. Scaring everybody. The AI race is one that is large and in charge, and who wins the AI race wins the world. I know that sounds very, very damning, but it's honestly the truth. Whoever is the powerhouse in AI will be the next economic just powerhouse in the world. It's just hands down. So that's got a lot of people scared. And tomorrow morning, Monday, whenever stocks open up, we could see some effects of that. We could see some of the biggest AI names take a big hit on Monday morning. So we'll have to just see how the news is taken on that for this weekend, and regurgitated for tomorrow. We'll just have to see what they say and what they do with these stocks. But make no mistake, this week again is filled with landmines. So, like I said, we already went over the earnings that are coming up. We are going to go through these stocks in order: SoFi, AT&T, and we're going to go through basically the ones I have my eye on the most, and also the ones that are, most loved and most followed. So, without further ado, let's talk about SoFi. So, SoFi here has formed a massive cup and handle pattern. And with this cup and handle pattern, we have a measured move all the way up to $29. That's right, $29 is the measured move of this cup and handle pattern. SoFi is looking very good. They're in an uptrend. They broke out down here of the $11.72 high, and they've powered up all the way to about $17. They took a little bit of a breather here, and now they're starting to power right back up, and power right back up to $18.98 or $19 here. So if earnings are good and this company continues to have these beats as they have the last 4 quarters in a row, then I believe this stock will be on a march up to $20 plus. So as you see here, we have an estimated earnings per share of 3 cents, 3.5 cents, and an estimated revenue of 674.63 million. If we go back to last January, they beat by almost 400%, and they beat revenue by about almost 4% there. So this company's consistently been beating by a lot, especially EPS. See 400%, 186%, 112%, and then 23%. So the beats are getting smaller as we're going along. While the revenue beats, so the revenue beats are getting larger while the EPS beats are getting smaller. So they did 2 cent and they did a 3.7% or 3.7 cent EPS beginning of 2024. So I would probably say they're going to come in at 5 cents is my guess for this company, a 5 cent EPS. And then down here, I think they'll breach $700 million for this quarter. And I think the guidance will be good as well with the new administration and with them knowing that they're going to start kicking up those college loans again and not having to uh, have the government eat those anymore. So I believe SoFi looks really good, and they're really geared up for a great earnings call and earnings report. And I think we're going to be seeing a two handle in front of this name very very soon, which we haven't seen that in a very very long time. We're talking about 2021. So the last time the last time they were up at $20 plus. So let's keep it going here. Let's talk about AT&T, ticker symbol T. Everybody should know what AT&T is. Obviously, they run a ton of networking here in America, and obviously they are one of the biggest phone providers and internet plans, phone plans, so on and so forth. So AT&T, I didn't even realize until I pulled them up recently that they've been on this massive bull run since 2020, end of 2023. This massive bull run from down here at about $12.20 all the way up to over $22 at this point. And they're forming this very beautiful bull flag. They have not broken out of the bull flag yet, but they have formed this very nice bull flag on this volume shelf. And as such, our measured move is up to $25. They report earnings on Monday before the bell. So they report earnings in the morning tomorrow. And, they've beat, missed, beat, missed, beat. They're gonna miss. They missed the beginning of 2024, and they've been on this little pattern of beat, miss, beat, miss, beat, miss. So they could miss here. And if you look deeply, every time they beat or miss, they actually are continuously going up. So whoever's investing in this, the hedge funds, whoever, they don't really care about these levels of misses because they're minute and they're not really worried about them. So I don't really have a prediction for this. I don't follow AT&T. I'm not invested in them. I have no desire to be invested in them. So on to the next. Boeing. Boeing, Boeing, Boeing. Boeing has just been an absolute dumpster fire. Dumpster fire. Absolute dumpster fire. This company has just time and time again proven itself to be poorly led, poor management, poor ethics, poor ethics. People have died. People have died in their aircraft. And that is just disgusting. Disgusting to me. It's just disgusting. So, all I'll really say is they are the main manufacturer of aircraft besides Airbus. Honestly, Airbus isn't big enough yet to really do the capacity of creating of planes as Boeing is. So this company is one of those that's needed and can't really be replaced at this time, sadly. As much as we would all love for them to be replaced, as they've just failed all of us in the world. Um, but nevertheless, they have earnings coming out. Dumpster fire, negative 2.54 dollars per share, and then 16.47 billion on the revenue. This is all being released Tuesday morning. If we just go back, 16.74. I mean, they were doing 16.54 and actually reported 14, 2 years ago. So they have just, not done anything. Not, they've turned it around a little bit, but man, there's just so many headwinds on this company. I'm not touching it. I understand that some people out there they believe this can be a value play and a nice little stock to own for recovery, and they know that it's needed, but I don't want to touch it at all. We do have this falling wedge pattern here, and we have obviously this cup and handle forming. It could continue to climb up here, up into this cup and handle and break out back above 400, which we haven't seen since 2019. But hey, again, I'm not going to be playing this name, just trying to review all the companies that are coming up to report earnings. Starbucks, way less of a dumpster fire, but also it's been a little bit of a dumpster fire. So there was talks from some bigger creators about a caffeine bubble, and I'm really starting to see it now. I'm really starting to see that caffeine bubble now. We're talking about local cafes, which some people would rather go to because the coffee is going to be better, it's going to be more consistent, and you're giving your business to a small business instead of a large corporation like Starbucks. Not just that, but you have Dunkin' Donuts. You now have Dutch Bros. You have other smaller corporation type coffee houses. You obviously have Starbucks. You have Monster. You have Celsius. You have Red Bull. You have everybody and their mother coming out with some sort of new um, energy drink. And it's just so much energy, so much caffeine. It's crazy. It's crazy. I don't know. I don't know. People can only consume so much caffeine. If I consume too much caffeine, I'm bouncing off the walls, right? So I believe everybody's the same. Can't be drinking like 20 monsters a day, 20 cups of Starbucks a day, sugar loaded. Okay. It's not healthy. So I don't know. It's 4 quarters of straight down. They've brought in the Chipotle CEO to try to turn this ship around, which he turned Taco Bell around. He turned Chipotle around. I think he's met his match here. I'm not saying Starbucks isn't going to grow. I'm not saying Starbucks isn't going to be around anymore. I'm just simply saying I think the heydays and these all-time highs and the best times of Starbucks are behind them. I really do think they're behind them. Again, I think they're going to grow and they're going to get bigger. And yeah, their stock price is going to go up, but I believe there's just better opportunities out there um, that have better, more of a moat. I understand Starbucks kind of has a moat, but again, I just told you a million different companies that are in this energy space, caffeine space. So if we don't break through this 110 here, we could be seeing a triple top. So we hit once, we hit twice, and now maybe thrice right here. We might hit this, and if we do, we could come back down to 70s to fill that gap. So earnings are on Tuesday at after the bell, 66. So 67 cents EPS is projected, and then estimate $9 and or 9.33 billion is projected for revenue. I don't know, guys. They've been missing left and right. So if I had to go with the tide, they're probably going to miss. They're probably going to miss, and people might not care because no, we've bounced pretty hard, so they might care a lot. They didn't care down here because we were on the floors of valuation. Now they might care again because we're up at the upper echelon of this valuation. Moving on, Tesla. I really don't know. They might miss again, honestly. But at the same time, I think this last quarter in October was troughing of margins, troughing of overall deliveries and just the business. I think this bad 4 quarters in a row, I think we finally are getting out of that and we'll start seeing this consistent beating again, either here or the next quarter. But what I'm seeing on the charts is we have this massive rounded bottom dated back to 2021 when we hit this high of $414.50. We've broken through that. We've come back. Now we are retesting and we have a measured move up to 581 and then $731. So I believe they could miss or have meh earnings and still power higher. Why? We've already had a nice little pullback. One, two, we have a lot of just futuristic things coming down the pipeline for Tesla and Elon Musk. Let's just be honest. We have Optimus, we have robo taxis, we have the energy business to continue to thrive and grow at a rapid pace. And he's now on Doge, and now he's in the government, and you know, politics, politics, guys. So yeah, I believe we could see some turbulence around earnings reporting after the bell on Wednesday. But at the same time, I think it's all about what Elon Musk says on the conference call, and how it's perceived, honestly. And because people are investing, this valuation is way off, way off. Based on the numbers, it's way off. But based on the future growth of the company, based on the products coming down the pipeline, I do not believe it's overvalued. I believe it's undervalued if they are able to hit on all those products. And I think they will. I think they've proven themselves to do this time and time again. So, yeah, EPS is at 76 cents, and estimate of revenue is 27.22 billion. And last year, this time, they did 71 cents and 25.17. So I think they should be able to knock this out of the ballpark. Honestly, I think vehicle market's getting a lot better, and yeah, I think they should be able to double beat and then guide higher for a better year. Me personally, I'm not worried as much about the vehicles, um, even though that is the largest business model of this company right now. I think that's all going to play itself out, and they're going to continue to grow there. I'm more concerned about, let's get some timelines. Let's get some timelines on Optimus. Let's get some timelines on the Robo Taxi, and let's hear about this energy business, because I think that's what's really going to drive the future growth and future revenues and EPS in this name. Moving on, we got Meta here. Meta, I think, is still way undervalued. We're breaking out of the symmetrical triangle pattern. We have a move at the 780, and yeah, I had to pull it up here. Let's see. Meta here. So I basically put in here, this is on the weekly chart, but I have, they're projected to do report Wednesday after the bell, $6.75 essentially of EPS, 40 almost 47 billion in revenue. I think they're actually going to come in with a 10% EPS beat of 742, and then a 2% beat on revenue of 47.90. Those are my projections that I have for Meta. I think it's going to be a really great quarter due to just the election that we had, and then the holiday season, lots of shopping, lots of ads being out there. I think it's going to be a blowout quarter for Meta. Double beat, raise of guidance, and I think they'll be on their march to 700 plus on this name. 700 plus, yes. And I actually have this measured move up to about 780 from this ascending triangle pattern, and this measured move is 706 from this symmetrical triangle pattern, ascending and symmetrical. So yeah, I think this name is going to be 700 plus. I think it could hit 800 by 20 end of 20 before end of 2025, and I really like this name in my long-term portfolio. Microsoft, I'm not interested in this name right now. I think the valuation is above. I think they're overvalued at this point. I'd like them to cut down below 400 to really, for me to want to start a position in this name, unless the earnings just come out and they're way better than anticipated. But by that time, we would break out of the symmetrical triangle pattern and launch higher to 466 and 512. I do think they're going to go higher, but again, I rather put my money where I know that we could have some big gainers. And just overall, I want better returns. I want to beat the market every year, which the market average is 8 to 10%. So I'd rather beat the market every year than be in line with the market. Because if I'm going to be in line with the market, I might as well invest in the VOO or something that mirrors the S&P 500, right? So yeah, they beat pretty much all the time, guys. Nothing to really say here. They're probably going to come in here. They're going to beat their 311 EPS, and they're going to beat their 69 billion basically in revenue. If they don't, they're going to tank. But I think they're going to beat because they consistently beat. On to IBM. Symmetrical triangle pattern here. IBM's been consistently beating as well. A lot of people, a lot of talks about them and supercomputers and stuff. So this could be a sneaky AI play in my mind. $3.80 essentially EPS and 17.6 billion. They report Wednesday after the bell, and these are all in order, guys. Obviously. And yeah, I think they could have really good earnings. Um, but we'll see. They had good earnings last time, but something wasn't right. Well, actually, no, they missed on revenue, so they tanked. And then before that, they beat and they went a lot higher. So yeah, I don't really have too much to say about IBM besides symmetrical triangle pattern. If we break out here, we're probably going to 250 plus. Next up, Hitty. This is a small cap company. It's in the cannabis space, and as such, you have this beautiful cup and handle. They report and they've been consistently beating, as you see. They are still net negative company on earnings, but they are almost at net positive on earnings and getting there pretty rapidly. And actually, the last 2 quarters they reported break even on EPS, and they reported almost 1 cent beat or 1 cent on EPS. So having this 1 cent, they could come in line, or they could come in break even, or maybe even do 1 penny or something like that. Who knows? But they're in the cannabis space. They are a small cap. They're $240 million market cap. Very, very tiny. But this name is everywhere. I've done personal research on it, and I actually have their fair value north of $6 per share. Now, that doesn't mean anything unless they're able to continuously beat and continuously keep their revenue and their earnings per share and everything on the right track. So that's what truly matters in this name. But they do have this beautiful cup and handle. They've come back. They've retested this cup and handle area, as you see here, and they're just smoothly sitting upon this cup and handle pattern, waiting, consolidating, and I believe that they do have these good earnings. They will see a big, big pop higher. So we will just have to see how this plays out. I do believe they'll come in at 100 million, north of 100 million revenue, and I do believe that they might be able to get in and sneak in 1 penny of EPS, if not break even. So big earnings coming up for Hitty again Wednesday after the bell. Apple. I think Apple's one of the most overvalued names in the stock market right now. Yes, you heard that right. I believe they are one of the most overvalued names in the stock market right now. $3.35 trillion revenue or market cap. I don't get it, guys. I don't see innovation. I don't see future tech. I don't see anything that's going to drive growth for this company. They're relying on the products they already have. They are squeezing the ever life out of everybody in that ecosystem with the subscriptions for the extra gigabytes, so for your iCloud so you can actually have it, and for their other services they're bundling them all together. Apple TV hasn't worked out, hasn't panned out. Netflix is the king there. Amazon is probably second. you know, just so many things that they've tried, the car, they've all haven't worked out. I don't see the path forward besides relying on what they already have and just continue to buy back shares with all that money. I truly believe wearables, glasses, Meta AI glasses, those types of things are the future. And I do believe that Meta and some other companies have had their iPhone moment. I believe they've had their iPhone moment. And as such, I believe Apple's in trouble. I still think they're going to do fine and they're going to be around, but I do believe that the heydays of Apple are over. And I could see them miss earnings here or just have a bad 2025 in general and fall back down to 200 area. That's just what I'm seeing. They're expected to have $2.35 in EPS and almost $125 billion in revenue. And, they pretty much consistently beat. They missed last quarter on EPS, but they beat on revenue. I just don't know. I don't know if the last iPhone was big enough for everybody to run out and go get iPhones for their family for Christmas and the holidays. We will see very shortly. Thursday after the bell is when they report. We will see how they do, but I don't believe this deserves to be over a $3 trillion market cap. Honestly, I really don't. I don't see the vision. And my personal high five indicator doesn't see it either because we're having this bearish cross down of the smoothing line, which is a big, big no no. We have this nice consolidation here in support, but if we can continue down through this smoothing line with this death cross essentially, then we will be going down to 200s. Okay. Next up, Intel reporting on Thursday after the bell. Another dumpster fire stock that's just not been able to get it together. It's an American company. I think they're going to get bought out. There's a lot of talks about them getting bought out to keep them as an American company. They are doing a lot of big things in the chip space, but they're just poorly ran and just beaten down dog. So I believe that the Trump administration and they're going to work to get this company bought by another American company and keep this in America, keep that big chip plant that they're building up in Cleveland or Ohio, keep that going and yeah, cuz we're going to need it. We're going to need chips. We can't only rely on Taiwan. So, Intel they probably miss again, honestly. They've been a dumpster fire. They probably miss, but everybody's just going to, want to see any shines of light, and if they do, this name will go higher. Does look like we're putting in a double bottom here. We've bottomed around about 18 and a half ish, and if we break over this 2650 ish, then we'll be on our way higher into the 30s. But I don't really think it matters again because I think this is a buyout candidate, and I don't think they're going to get a favorable buyout. They're worth 89.84 billion on the market cap. I can see somebody buying them out probably for no more than 100 billion. No one's probably going to spend more than 100 billion on this company, and it's probably going to be a brokerage deal by the government. Nokia has this beautiful cup and handle pattern. We had a false breakout here, but I think we're about to get the real breakout here soon. This company is a almost 25 billion dollar market cap. We have earnings coming Thursday morning. We have an estimated EPS of almost 14 cents and a revenue of 6 billion estimated. I think they'll come in and I don't know. I don't know Nokia enough, honestly. They could beat, they could not beat. I don't know. But it's it's up in the air. But I know if they do beat and they break this $4.77 cup and handle breakout area, and especially if they engulf over this $4.95, so they go north of $5, they will be on their way up to $6.68 based on our measured move of this cup and handle. So something to watch if you're looking for a nice little trade. This could be a nice little trade to put in your back pocket, put on your watch list, just in case they do break over these key resistance areas, because then they will be marching up to 5 plus, 6 plus. Next up, Visa. What a great company. What a big, big monopoly. Them and Mastercard are just two of the biggest monopolies in the financial sector that there are in the world. Okay. Every time you swipe that credit card, every time you beep it, it literally pays them money. They are just a cash cow. And as such, you see back here, we had this bull flag. We had a breakout. We had a bullish cross with the high five indicator. We had our measured move up to $333 ish. And guess what? We are right here about to tag that profit target level. So if you would have been in this back here based on my strategy, you'd be all the way up here, smacking right into that nice, juicy 22% profit target. Now we have another much smaller bull flag forming here on the weekly chart with a nice little volume shelf here. And our measure move for that is only about 5 or 6% higher. And from where we're actually already at now, it's about a 2% move. So definitely not a really great trade to be going off of. This name is a momentum play. It gets above the high five indicator. The high five indicator stays green. You stay in your Williams consolidation box, as you see up here, which is my personal strategy. You stay in there, you stay riding this, you will continue to go up and up and up until one of those two things break. That's it. That's the time that you get out. So as long as that keeps happening, you are good to go on the trade on the trend. Basically, here you have earnings. I think they'll beat. They consistently beat time and time again. They can easily ramp up those like those little fees and everything. So I think they'll beat again, and they'll, I don't, when these guys beat, they're so big. When they beat, it's like, okay, sometimes it depends on how much they beat by. It depends on, how good it was, their guidance, all this stuff. So sometimes it's massive moves up. Sometimes it's like consolidation sideways or a little bit down. So I could see them honestly, you know, doing whatever and then coming back to retest and then bounce higher as 60 to 70% of charting patterns retest. Okay. Almost done, guys. Now is looking um just like a powerhouse, just like Visa. They're so intertwined with Nvidia. Uh Nice little falling wedge pattern here with a measured move at the $1,226. Looking really good. Consistently beat on earnings. Have no doubts they'll beat on earnings again. I think their valuation is honestly stretched a bit for where they're currently at on free cash flow, EPS, and revenue. $2.96 billion in revenue, and they're almost a $250 million market, or sorry, $250 billion market cap almost. So yeah, eesh, I don't know. I'm not going to be investing in this company right now. It's just very, very rich on the valuation. They have the rosiest of assumptions priced in, and they really need to hit on those if they want to they want to continue higher. So, next up, we got Mobileye over here. We're going to go down to the daily chart. The weekly chart is just messed up from this massive drop down here. This is one of my favorite investments and investment opportunities for the long term. I believe that they're a top 3 player in full self-driving, robo-taxi, and autonomous vehicle technology, alongside Google's Waymo and obviously Tesla. I believe that this company will do well in the long term, and as such, I believe that on earnings this week, on Thursday morning before the bell, I think they're going to come in and they're going to shock the world. Last earnings, they had a double beat and a raise of guidance. This whole year's guidance, this whole year's EPS and everything was all based off of worst case scenario. We are not getting worst case scenario in the world. China's one of their biggest consumers, and China just had their largest GDP beat growth since July of 2023. As such, this is 20 to 30% of their company's revenue growth. So as such, with their GDP doing so well this past quarter in China, I think this name Mobileye is going to get a good bump in revenues and earnings per share. They also have a lot of deals they're working on that are coming down the pipeline that their CEO said that they will be talking about and releasing over this year. So that is also massive. And then on the technicals, they're a very heavily shorted company. They have about 20 to 30% short interest, and they have about an 18 to 19% short float on this name. And basically, what all that means is if we do start moving higher at a consistent pace, that could cause a short squeeze, which is basically forcing hedge funds to buy back their shares that they're currently shorting for this company to go lower, meaning they're buying them back, meaning it sends the stock price even higher. So on the technical side of things, besides on the earnings, I think they'll come in at 12 cents or higher on their EPS, and I think they'll be north of $500 million of revenue. That's my projections that I'm seeing based on my analysis, but we will see. So I think it'll be a double beat and a raise of guidance, and I think we're going to see a big pop to $20 plus. Yes, $20 plus, and it's $16.54. I could be wrong. I'm not certain. I don't know. I don't have inside knowledge. I don't have anything. This is just run off my projections and what I truly feel and think that they're going to come in and report. I said last quarter that margins have troughed. I said last quarter that headwinds are going to be coming into tailwinds. And I was right. And I think I'll be right again here as those tailwinds start to push this company higher for this quarter and for future quarters this year. So, beautiful cup and handle pattern. We're not breaking out of it or anything. But we have a beautiful cup and handle pattern. We're flipping green on the high five indicator. We're starting to curl up. We're making higher lows here. We're sitting on this nice volume shelf. All of this support that was created in 2020 at the end of 2024 is now holding this name perfectly as support. we had these two little dip down areas. These were probably liquidity grabs, in my opinion. And now we are sitting right here at this nice little 1640 to 1750, 1760 area on this nice little consolidation box and support. And I think we're going to continue to climb higher. We're going to see this bullish cross higher, and we're going to start moving up to 20, 22, 23, and then possibly back up to all-time highs as this name continues to go higher and higher and continues to land deal after deal and continues to do what they do with their great technology. So that is earnings week. That is news. That is economics. That is what I'm seeing for this week. If you made it to the end of the video, thank you. I really appreciate you. Consider liking, consider subscribing, consider following. I really appreciate all of you. I really appreciate the love and support you all continue to give me as we grow this community. So, with that being said, I hope you have a great week. I hope you have a great rest of your Sunday and be careful for those landmines. I'll catch you guys in the next video. Have a great day.